South African households lost 828.2 billion rand in real net worth in the first quarter of this year. This is according to the latest Momentum Unisa South African Household Wealth Index report released today. This is a 52% worse. This is a 52% worse number than that seen in household net worth in the third quarter of 2008, following the global financial crisis. A combination of the COVID-19 pandemic and government and market reactions to it have all served to destabilize the global savings environment. Well, to unpack the issues for us, I'm joined on the line by Johann van Tonder. He's a researcher and economist at Momentum. Thank you so much for joining us, Johann. So the impact on South African household savings has been quite significant. So do break down for us how you've seen that net worth being eroded.
Good afternoon. Yeah, it was really devastating. As you mentioned, it's the biggest loss since we started measurement in 1993. And basically the main reason for the loss is because of the decline in the value or the real value of households' assets, particularly their pension funds, as well as other investments in unit trusts, etc. So basically the COVID-19, the lockdown, the impact on financial markets, etc., caused financial markets to depreciate or decline sharply.
Yes.
And that's the main reason then for the decline in the wealth.
Of course, governments had to react to the virus, with many opting for nation lockdowns, which served to curb the spread of the coronavirus on the one hand, but had obviously untold economic impacts on the other. And presumably, that's another reason why we've seen the value of markets decline, because of the impact that the lockdowns have had.
Yes, quite right. There's a very strong relationship between economic growth, household wealth, and employment. So when there's a lockdown, obviously there's not going to be production, and that impacts the value of pension funds, the value of households' residential assets, like your home where you live, and so on. So that had to happen, but fortunately we've seen a little bit of a turnaround already since we've moved down to level 4 and on the 1st of June to level 3. I think there will be some kind of recovery in the wealth that we've seen lost in the first quarter.
Yes, but then to what extent will we see that recovery? Because obviously, because of the decisions that have been taken by government, it's had massive impacts on the economy. It will have massive impact on company earnings and so on. So to what extent are we able to bounce back, so to speak?
Well, if you just have a look back to what happened in the Great Recession a little bit more than a decade ago, we haven't really recovered from that yet. So this crisis is on top of not having been able to recover from the Great Recession's loss in wealth. So how long this is going to take, I don't know.
Yes.
It's all going to depend on what the type of government policy they're going to implement post the lockdowns and post COVID-19. So that type of policy will determine whether our economy will start growing, whether there will be employment, and whether we can recover a lot of the wealth.
Yes.
But if we learn from the Great Recession, we need to do things differently compared to what we did then.
Yes. One last thing, Johann, before I let you go. You do also indicate in the report that the recent rating agency downgrades of the country's sovereign have also dealt a blow to investments.
Yeah, basically the decline in the wealth was the culmination of what happened. You will recall that the announcement came on the same day that President Ramaphosa announced the lockdown on the 23rd of March. So that combined with the impact actually caused the 820 billion decline in real household wealth.
Johann, we're going to leave it there. Thank you very much for giving us some insights. Very worrying indeed, but hopefully we need to be optimistic that things will bounce back and people's net wealth will be brought back to them, so to speak. That was Johann van Tonder. He's a researcher and economist at Momentum.